Well, welcome back to another video. My name is Adam. Today we have some exciting news coming out of Alibaba. And Alibaba was fined $2.8 billion as a result of the recent antitrust probe. And Alibaba responded pretty positively to the news. And we're going to explain why that is. On this news, Alibaba is up by about 8% today, which is a significant increase in the stock price. And I think this run will continue for some time. As a disclosure, I own 10 shares of Alibaba, and I will continue to hold them for quite some time, okay? I mean, I know 10 shares is not a lot, but that's how much I could afford to put in Alibaba. And I do believe in this company in the long term. So it's an e-commerce giant. It's basically the Amazon of China. And recently they got fined, again, 2.8 billion because Chinese Communist Party said that they were engaging in anti-competitive or monopolistic practices. And as a result of their investigation, Alibaba got fined $2.8 billion, which is about 4% of their sales. And the reason why this is good news is because, one, it reduces the uncertainty over the outcomes. So it could have been a lot worse. And two, this is kind of just like a slap on the wrist, okay, from China, not necessarily making them sell any of their subsidiaries, okay? It's just they're slapping on a wrist. And again, I think largely as a result of this, we have seen tremendous price and analyst upgrades. So for April 12th, 7 analysts upgraded Alibaba to a buy or reiterated their position with price targets ranging from $285 all the way to $338 is the most highest price target. And we can see, of course, Alibaba right now trades at a significant discount. I'll just put this to the side at $240. Okay, so about like a 30 to 40% upside from here. Okay, so I do see this Alibaba trend continuing to grow. So let's take a look at the letter that Alibaba sent to its shareholders and the community. So today, Alibaba Group received the administrative penalty decision issued by SAMR of the People's Republic of China. We accept the penalty with sincerity and will ensure our compliance with determination. On this occasion, the entire team at Alibaba would like to express our gratitude, etc., etc. So this is, again, opposite to the view that Alibaba took recently. So, for example, Jack Ma was increasingly criticizing the Chinese Communist Party for its strict regulations. And now it's looking like it's taking a step back and actually complying with the People's Republic of China or the Chinese Communist Party to go with their regulations and to actually say that this is a welcome change. Okay, and again, I think that, of course, Jack Ma and Alibaba probably still have their reservations against the Chinese Communist Party, but now they're taking a different approach. They're trying to comply with their regulators, and I think that's a pretty smart move because you do not go against the CCP. So over the past several months, we fully cooperated with SAMR investigation and seriously studied the government's policies and expectations for internet platform economies. In this connection, we conducted a self-assessment, blah, blah, blah. So the penalty issued today served to alert and catalyze companies like ours. It reflects the regulator's thoughtful and normative expectations towards our industry's development. It is important action to safeguard fair market competition and quality development of internet platform economies. So again, stark opposition to what they were saying, Jack Ma was saying previously. And if you don't know, Jack Ma actually disappeared for like 3 or 4 months based of his criticism on the CCP's regulatory platforms. So internet platform economies are the new economic structure created out of the latest cycle of technological revolution because of the China's economic and technology development, as well as our regulatory support for innovation. Alibaba has been given the opportunity to explore and create platform business models such as Taobao and Tmall with the help of millions small and medium-sized merchants. So blah, blah, blah. They continue. At the same time, we are cognizant that the value of platforms comes from helping participants to succeed through integrating and sharing resources, as well as continuously creating value for society. So again, to me, it seems like they're paying lip service and they're just, saying what people want to hear. And part of it is, of course, what they believe in. So we are committed to ensuring an operating environment for our merchants and partners is more open, more equitable, and more efficient and inclusive in sharing the fruits of growth. Today is an important day in Alibaba's journey of growth. It is the new starting point for us, one where we tackle problems ahead and commit to innovate. Alibaba would not have achieved our growth without our sound government regulation and service and critical oversight, tolerance, and support from all our constituencies have been crucial to our development. For this, we are full of gratitude and respect, etc., etc. So again, one thing I want to say here, Alibaba would not have achieved our growth without our sound government regulation and service, so that this came from the letter. That's a change in the tone from years past when Alibaba and especially Jack Ma would be dismissive of regulators. Of course, that drew the ire of Beijing, which late last year called off the huge IPO of Alibaba payments affiliate Ant Group. And if you don't know, Alibaba owns, I think, about 10% of Ant Group. And as a result, if we look at the stock price, we're looking at like the 6-month chart, it has declined steadily from like $306 all the way to where it is now, down 21%. Okay. And again, I do believe in this company, and that's why I bought it. You do need to know the risks when buying this company. So for example, it is a Chinese-based company, and with increasing US-China tensions, it may be kicked off the New York Stock Exchange. That means you'll still own your shares, but it might be on the over-the-counter market exchange. Some other news, it is really nice to look at what Yahoo Finance people are saying. And so rumor has it that Baba Bears have joined together and are launching a GoFundMe page to help cover their puts. It's just kind of funny. Next one is Munger thinks Baba is as safe as Treasuries, which again definitely has some truth. So Charlie Munger prefers Alibaba stock to Treasury bills. Here's why. And here's just like, so the Daily Journal Corporation, of which Charlie Munger is on the board there, he bought a bunch of shares of Alibaba. Okay, and so since then, so the company hasn't made a change in their portfolio within over like 10 years or something, or made a significant change since the fourth quarter of 2014. Since then, the company has not made any further changes until recently in the first quarter of 2021. The Daily Journal added a new holding for the first time in over a decade. And so the company acquired shares of Alibaba Group. At the end of March, the holding company reportedly owned 165,320 shares in the Chinese tech company, giving it 19% portfolio weight. The position was around 37.5 million. Now, this also comes after the news that Bill Gates, I think, sold off 50% or 100% of Alibaba stock. And again, since maybe Bill Gates is a bit more risk averse and he was concerned with the China-US tensions, he decided to sell off his shares. I'm not sure. But again, it's nice to see that some investing legends such as Charlie Munger, best friend of BFF of Warren Buffett, bought some shares of Alibaba. Okay, and of course, I'm continuing to hold my shares. So that's good news. Next news is, let's just take a look at some of the technicals here. So trailing PE is 27. So that means like price to earnings over the last 12 months is 27. And the lower to the number, the more of a value play it is, the better it is. Forward PE is 20. That's incredibly low for a company that's growing at a rate of like 30 to 40% per year. And we can see that it is 52-week change is just 11%. Grossly lagging behind the S&P 500. Their 52-week change is 49%. So you have been better off to invest in the S&P 500 overall versus just Alibaba. But I think that will change. So if we look at, again, their growth projections. So current year, they're expected to grow 39% sales year over year. Next year, 30% sales year over year. So again, let's compare numbers with Amazon. Of course, Amazon is a bit of a safer play because it's based out in the US, but nonetheless, Amazon and Alibaba are very similar in the sense that they offer many services. So for example, Alibaba offers cloud, Amazon offers cloud. Amazon, of course, sells products online and delivers them. Alibaba does the same thing, okay? So Amazon, their trailing PE is 80, which with a forward PE of 50. Okay, if we remember Alibaba, so 80 versus 27 and 50 versus 20. So this tells me Alibaba is grossly undervalued. Now let's take a look at their growth. So we saw, of course, Alibaba, their current year projections is 39% growth, 2022, 30% growth. For Amazon, their projections are 20% growth versus 17% growth. So Alibaba is actually growing sales faster than Amazon is, but Amazon is grossly overvalued relative to Alibaba. So this is one of the reasons why I'm invested in Alibaba and not Amazon. Okay, I just think there's more growth potential and appreciation, not only in the revenue but also in the share price. Okay, and again, maybe it's a bit more of a risky play, but I'm willing to take that risk for higher returns. Okay, and it's actually my biggest portfolio holder, Alibaba. I have, I think, again, 10 shares around like $2,000 there, close to 3,000 Canadian. So if we're looking at the technicals here, this is the 3-month chart. We can see right here that the RSI is at the bottom. Now hovering at 56. So even despite this 7% move upwards, it's still at 56, which means it's neither overbought nor oversold, kind of in the middle there. And I would say above 70 or 80, that's when it's overbought, and below 30 is when it's oversold. And if we're looking at the 50-day moving average in this green line, it's like $243. It's still below, the share price is still below the 50-day moving average, okay? So, I mean, I still think it has room to grow, and I think it will grow. The share price will grow for quite some time, okay? And if we're looking at the MACD, it's still largely in negative territory, but again, now we can see this bit of a spike upwards, and hopefully it'll continue its move upwards. So overall, I do recommend Alibaba as a stock to buy. Of course, please do your own research before buying any securities. I think I would say my price target would be by end of year, probably $300 to $350. Just give a range right there. We'll see if that actually comes true. A lot of it depends on, of course, what happens with US-China tensions, whether or not it is delisted. And again, this is a risky play relative to something like an Amazon. However, I do believe in this company. Thank you so much for checking out the video. If you enjoyed it, please be sure to smash the thumbs up button, leave a comment down below, and also subscribe if you haven't already. As well as feel free to check out a couple of links down below in the description. One is to my free Discord group. It's growing. It has about like 30 members, as well as a private group where I announce my buys and sells in real time. So for example, on March 30th, I bought Schrodinger stock, which was $68.55. And then literally a week later, I sold it for $80.02. So in a week, I gained 17% in that stock. The next stock was Kirkland Lake, for example. And right now, Kirkland Lake is trading at $46. And again, we can see my buy price was $40.65. So again, in a week and a half, it gained 14%. So let me know if that's something that you'd be interested in. And finally, if you're Canadian and you want a zero commission trading app, I highly recommend Wealthsimple. And if you sign up down with the link below, you'll get $10 towards your next trade. Okay, but as well, there's a free Discord group where one guy actually announced a penny stock called Fire, and it actually went up by 50% before he even announced it, okay? Where the cost was around, I think, 26 cents, and then it went up all the way to over 50 cents, okay? So definitely be sure to check that out. Again, take care. Thank you so much. I love you all, and I'll see you in the next.